Well, welcome to Introduction to Financial Governance. My name's Philip Jones and I have been working with local government since 1993. My role is an accountant or bean counter, but don't hold that against me, please. For the last 9 years, I have been helping a variety of councils, including Local Government New Zealand and Equip, in helping elected members understand their role in financial governance. So welcome. Now, I'm the helper, and in the previous role play, we had two councillors who didn't understand financial governance. Part of my role with Equip is to help all elected members understand financial governance and particularly their role. So welcome. So the objectives of what we want to talk about today, there's three critical messages we want to get you to take away with you today. One is, what is the role of this long-term plan, the annual plan, and the annual report, and why are they really important for you as elected members to understand what is their role and how they link into what you want to achieve in the next 3 years. The next thing we want to talk about is what are the tips in terms of local government accounting requirements. They're not like business, and they've got some distinct differences that we will explore at the very high level. And then also the role play talked about those financial reports that no one could understand. So what are the things that you as elected members need to look for when you receive the financial reports from your finance team? And the last thing we want to do is saying is, okay, where to from here with your ongoing role and how Equip can assist you in that role in terms of what products and workshops and seminars and webinars will be coming to a space near you shortly. So let's move into the local government planning and reporting cycle. Now here at the beginning, at the top, we've got the well-beings. Now some of you may or may not remember that the Local Government Act was changed by central government because they thought that costs were increasing because we had these nice well-beings. Well, they are still a principle in which local government operate. And well-beings talk about the community, the environment, the social and economic well-beings of your community. And from that, we have then the community or council outcomes. And these are the big objectives for your community. For example, you might want a safe environment for your community. And in the role play, one of the councillors there wanted more cycleways and walkways. So that would actually link to some of the outcomes. So as part of council's responsibilities, they must actually say, well, what is the community wanting and what's our response going to be? Now they are actually quite critical inputs into the long-term plan, and that must be adopted every 3 years. The last one was adopted by the 30th of June 2015. The next one will be adopted in 2018, and if you actually go back, the previous one to that would have, from 15, would have been in 2012. So also in the role play, we talked about why should the previous council adopt an annual plan. Well, an annual plan in terms of the legislation must be adopted by the 30th of June each year, and we're going to talk about what are the key components of that annual plan. The real hint for an annual plan is it actually enables staff to take action, and then through the annual report, that last cycle is saying is, this is what we have done in terms of those objectives and outcomes that were set out in your annual plan. And that then, the results from that saying is, how well did we do? What do we need to do differently next time as part of the annual plan process? So, if you look at the legislation, and for those of you who like looking at legislation when you can't sleep between 2 and 3 in the morning, is the purpose of a long-term plan is to describe the activities of the authority and to describe the community outcomes. So if you remember that previous slide, those community outcomes are really important. They need to be described within your annual plan, and those community outcomes are really important because they tell you why you are doing particular activities. For example, you might be providing community facilities. So why are you providing those community facilities? And what community facilities are you providing? For example, they become activities. So cycle and walkways might be part of a recreation activity. They need to be all described in your long-term plan. Also, we are required to provide water. So what is the outcome that the community want with water supply? One of the reasons originally water was provided and under council control was because it was a health issue. One of the big factors in people's longevity is potable water supply. That's why water is actually an important component for people's well-being. So in terms of the long-term plan process, it's also to provide integrated decision-making and coordination of the resources. So what does that mean? Well, when you often make a decision, there are consequences. For example, let's go back to the role play. The role play was about wanting more cycleways and walkways. So what is going to be the impact on rates and debt of that decision? And we talk about the coordination of resources. Now, council actually has lots of resources. Obviously, the resource to a rate and the ability to raise debt. They are resources that are available. But it's not only that. You actually have staff who become a resource in terms of undertaking those functions. Now, one of the things I have observed in my time in local government is often a council wants to achieve a whole lot of good things. But what actually happens is, do we actually have the resources sitting in behind in terms of staff to be able to deliver those projects and processes? The Act also talks about having a long-term focus. So the long-term focus is about for a 10-year period. So the purpose of the long-term plan isn't to actually say this will be the result in 10 years' time. It's saying we're going to make some decisions now, and what is going to be the long-term impact of that decision. It then talks about accountability, and we'll talk about that in the annual report, but it also talks about the opportunity for participation in decision making. So that actually allows people to comment and submit on your draft proposals. So here is a very, very quick high-level diagram, and we're going to explore this in other workshops. And we've got a proposed workshop about what is the role of an elected member in the long-term plan process. But this just shows you the key flows between the inputs, the processes and the outputs. So the inputs we will have are the council outcomes, the assumptions and levels of service. So for example, the level of service impacts on how much we want to then spend on that activity, which then impacts on our rates and our debt. Now, in the role play that was played before, we had two almost opposing views. One councillor wanted to reduce rates, and the other wanted to reduce debt. But also at the same time, what did they want to do? They wanted to increase levels of service. Unfortunately, they are almost mutually exclusive. You can't increase levels of service and reduce rates and debt at the same time. So this is the process that you go through with your long-term plan decision making in terms of what level of service do we want, how much is it going to cost, and who's going to pay for it. And we talked about some of those key components of the infrastructure strategy and the financial strategy. Now, the infrastructure strategy is saying is, what assets have we got? What is their condition? What are the risks And what are the things we need to do to maintain that infrastructure over the next 30 years? What are the key challenges of that infrastructure? Do we have enough? What condition is it in? Do we need to replace some of it because it's falling apart? Or do we need to build more because we've actually got more people coming in to our district or city? Then the financial strategy is talking about the high-level debt investment and rates and how there is a trade-off between the level of service and affordability around debt levels, rate levels, and if you're lucky enough, how you manage your investments. Now, a key component to who pays for what rates is your revenue and financing policy. Now, in the role play, you may or may not remember that one of the solutions was to charge all those new people coming into the district more. So if you want to do that, you have to clearly articulate that through your revenue and financing policy. So the key outputs from your long-term plan are your performance measures. And you go, what are performance measures? Well, performance measures measure your achievement against your agreed levels of service. For example, one of the councillors wants more cycleways. So a performance measure might be that the council currently has 22 kilometres of cycleways, and over the next 5 years we want to extend that to 30 kilometres of cycleways, just as an example. There are a variety of ways of measuring the key levels of service, and again we'll talk about that in some of our other workshops. And obviously a key output is our funding requirements. Now, funding's a funny term in local government. Funding refers to how we pay for our services. And there's basically two broad options, rating and debt levels. And we're going to talk about that shortly. So now we're going to move on and talk about our annual plan, which is the yellow, which falls nicely out of our long-term plan. So the purpose of the long-term plan is to propose an annual budget and funding impact statement. It's to identify the variation of the financials between what are you now proposing and the long-term plan, and it's also to talk about providing that integrated decision making that we talked about as part of our long-term plan and coordination, and contribute to accountability of the local authority. Now you'll notice I have deliberately struck out the last bullet point. That was a change in 2014 that the councils no longer have to consult on their annual plan. We'll talk about that shortly. So in summary, the annual plan is talking about the comparison with your long-term plan. Now, your next annual plan will begin probably in December, February and March, and will go out for consultation with the community in March, April next year. Now, if you want to reduce debt or reduce rates, you can. You've got to do it through that annual plan process, but be careful. If there is a significant change to your long-term plan, then it must be an amendment to your long-term plan. Now, we do actually have changes to our finances, and there are a variety of reasons why that can happen. For example, you may have a change to the timing of the project, the costs of a project, the economic environment might change, and last but not least, there may be a change in the focus of the council. All those can be managed through the annual plan process. But also, the important legal process is the annual plan sets the rates for the coming year. That is a primary focus of the annual plan. So, therefore, The annual plan falls out of the LTP, so a good long-term plan makes the next 2 years annual plan processing very, very simple. Is a requirement to report on variances for whatever reason and explain those reasons, and then obviously to say if those impacts change on the levels of service and on rates, what are the impacts? Now, I think it's really important that you understand the process to vary a long-term plan compared with amending. There is quite a significant difference. You can vary the long-term plan through the annual plan, but if you want to amend the long-term plan, that is a different process. Now, as I said before, there is a new requirement. Well, it's actually not a requirement, it's actually helping councils. If your annual plan doesn't significantly vary from what was proposed in the long-term plan, you need not consult. But if you want to consult, that is up to the council. So let's briefly talk about the amendment to the long-term plan. There are a number of key decisions that can only be made by way of a long-term plan. So therefore, if you want to reduce rates significantly or reduce debt or increase your cycleways and walkways significantly, that is an amendment to the long-term plan. So if you want to make one of those changes, council can do that at any stage through an amendment to the long-term plan. However, there's a funny quirk within the legislation. You can't amend your annual plan. You can only amend your long-term plan. Any amendment to the long-term plan must go through a formal consultation process. In that formal consultation process, there's 3 key steps. One is you put out a proposal, you hear from your community, and then you make your final decision. That also, there is one step that the long-term plan amendment must be audited. So let's move on now to the annual report, which is the reporting of progress against the actions as set out in the annual plan. So again, for those of you who can't sleep between 2 and 3 in the morning, here is an extract of the Local Government Act, Section 98, and it basically talks about what is the purpose of an annual report. It's to compare what you said you were going to do with what you've actually done, and part of the principle behind it is to promote accountability with your community. Now let's face it, no one wants to read a 120-page annual report. You'd go to sleep. However, there is a requirement now to produce a summary on major matters that the council wishes to inform the community on. So the annual report is the final step in the LTP process. It must comply with the Local Government Act and accounting standards, commonly known as GAAP. It also must include financial and non-financial reports. The non-financial reports relate to those performance measures that we talked about previously, and both of those financial and non-financials must be audited. So, the home straight. So let's talk about a couple of tips on local government accounting requirements. Unlike other entities, we don't make a profit. We're not there to make a profit. Our basis is of cost recovery. So our costs include operational costs, which is our day-to-day operations of staff, power, electricity, consumables, interest if you have debt, and depreciation. Now, we're not going to talk about what is depreciation today because we haven't got time, but certainly we spend a long time on our introduction to financial governance is what is depreciation in the local government sector. It's quite different, and there's quite strict requirements in the Local Government Act of how we are to manage our depreciation. That's all expenditure. Then we've got our capital and loan repayments. Now, in terms of our funding requirements, we can defer our costs. So if we wanted to, we can defer our capital component by the use of borrowings. And another couple of tips is that all income is treated as revenue. So for example, revenue that may not have any cash associated with it is treated as revenue. For example, the council may be given assets as part of a subdivision or another process that is revenue. Also, we might get subsidy for capital projects, particularly around roading. That again is treated as revenue. So therefore, be careful. If you have a large surplus or deficit, it can be misleading, and I suggest you talk to your finance people and understand why you have a deficit. Now, the last slide we want to talk about is what are the key things to look for in a financial report. The financial report should be reporting on your progress to date against your annual plan. Variances will happen. Your annual plan and your long-term plan are only forecasts, and forecasts will often be different. So the question you should be asking is, okay, if we have a significant variance, what caused it? Is that a one-off event, or is this an ongoing issue we need to have further information? But more importantly, what are the consequences of that variance? What do we need to do differently in terms of managing that? Do we need to do anything? Is this a good news story or a not so good news story? Also remember, cash is king. Understanding the impacts of cash is very, very important. And also, the last tip is that forecasts are very, very useful as they estimate the position at year end. So what is the result going to be at year end? Now, our last slide is talking about what are the next steps. And I'll spend about 30 seconds saying is there'll be a series of webinars on the subject coming to a space near you. And I think the important next step for a number of people who want to understand financial governance is this financial governance area, where we'll be talking about some of the things we've talked about today in a lot more detail, the role of the annual plan and LTP, and particularly those depreciation, and what do we mean by prudent financial governance. And then, of course, we've got our normal series, which you'll find in your packs.